Hi everyone, this is Terence, the Impossible Investor, back again for another market update. Now, so today I'm going to talk a little bit about different stuff over here. As we know at the beginning of this week, market has fallen because of Trump's tweet on the China-US trade war and the hard stance that Trump is really taking. China has not really said much since the event itself, but today, the hard stance of the China Premier itself and on the Chinese side, all right, has shook the market, or rather Asians markets for today's daytime trading over here. Now, so all this, if it continues, is probably going to ripple back into the US, opening at about 9:30 p.m. Singapore time. Now, so what happens over here is, everybody thought, all right, everybody thought the bulls have pulled up a victory again after the last 2 or 3 days of an up run over here, especially yesterday's strong run down to good positive corporate results all over again. Now, look, yesterday was a market whereby there wasn't really any news that was in play, so all the focus actually shifted back into corporate earnings, and corporate earnings really turned out good yesterday. Like Cisco had a good jump up on earnings over here, and then what we saw was also, I think, United Health has better than expected earnings as well. Walmart, I think they did pretty okay as well. So there wasn't anything that really spooked the market, so there wasn't really any sellers that was going to come in. So market rallied up. The S&P was up about, if I'm not too wrong, 20 over points on close. Let me just quickly check it out. Yes, that's right. The S&P rallied and closed at about 25 points over here after hitting a high of 30 to 35 points for the day. Now, so I'm actually still thinking that markets will come off because the whole episode hasn't really ended. So there is still a lot of fear in the market. There is actually a lot of sellers that are waiting on the sidelines for the next event to really kick in over here. But if you're gonna go short, when you go short, you have to go short on positive days like what we had yesterday. All right, if you get a bad day in the markets, most stocks will have already fallen. So if you're trying to get in, then you're really trying to chase the market. You're trying to chase the trade as well. Now, so let's take a look at some of the counters that I'm really looking to get short, or I'm already short in right now. Okay, now, so again, I'm going to say this all over again. The S&P 500 is a market cap index, right? Although it's a market cap index, it is really heavily controlled by the banking sector or the financial sector. Now, so if you're going to see the S&P really fall, all right, with conviction over here, the financial sector or the financial stocks have to be part of this play on the downside. Of course, the tech will have a big part in it as well, but it is really down to the financial sectors. Now, I had a good trade on JPM, which I've closed out in the last downturn over here. But I'm actually going to look back into this particular sector on a couple of stocks over here that I think we can benefit if the next down run comes about. All right, Morgan Stanley over here is definitely one of them. All right, now, so Morgan Stanley is sitting right now between the 250-day moving average, as you saw on the chart over here. All right, but what we have also right now is the stock is trading around $44. All right, and it has a kind of resistance level at about 45. All right, so the technicians will have a field day on this. It's around 55 over here that we're seeing on my computer screen right now. So knowing that over here, it actually presents a good place to really think about buying a put option, all right, for a certain period of time. This is not going to be a short-term trade. All right, am I expecting the market to come down? The answer is yes. Am I expecting it to come down in the next 1 week or next 2 weeks? I don't know. All right, okay, as Impossible Investors, what we do is we take high probability trades over here and we act as though we do not have a crystal ball at all. Yeah, all right, but always taking trades that make a lot of sense and on the good side of the odds over here would mean, all right, that our success rate is much higher, all right, than our failure rate over here. Yeah, all right, much like why people actually look at charts and try to time the market. All right, but I'm just trying to do this with options instead and the strategies I adopt. Okay, now, so if I'm going to buy a put option over here, all right, okay, to really benefit on the downside, yeah, okay, now what I'm going to do is, for example, on my screen right now, I'm just going to load up Morgan Stanley. All right, just let me redo it. Okay, now, so this is Morgan Stanley over here on the trading platform. All right, so Morgan Stanley closed at about 44.28. Okay, now, so you can see all the dates below over here, all the options that you can actually go out there and buy if you're, bearish on Morgan Stanley. Yeah, okay, now, so if I'm looking at this trade over here, what I really look at over here is at least a minimal duration of 35 days over here. Yeah, okay, now a lot of new option traders make the mistake of buying short dated options. All right, for example, yes, they do think that the stock is going to go down, all right, but the very first mistake they do is they buy a very short-term expiry options, all right, because in their mindset that is kind of like a cheap bet. Yeah, okay, but we all know this, buying cheap bets out there isn't the best choice that you can make. All right, for example, if you're going to go and be part of the lottery in Singapore, which is called the Toto over here. Right now, it's basically a lottery whereby you pick 6 numbers, and the 6 numbers will have to come out exactly like you have picked. Now, but if you're gonna buy a 6-number ticket over here, all right, right now I think it's up to $1. Yeah, all right, it's really cheap. Yeah, all right, it's really cheap for $500,000 to $1 million grand prize over here. But the odds are really severely stacked against you. So if you are really thinking about buying cheap stuff over here, all right, you're just playing against the odds and playing against the luck. Yeah, all right. Now, what I instead would want to do is, hey, I'm actually going to go for a slightly more expensive, longer expiry options, all right, because this gives me 35 days to be right. Now, look, the China-US trade war has been bouncing back and forth over here. All right, they're nowhere near, really coming to terms on an agreement that both parties are happy with. Right, so in this case, all right, I want the benefit of the doubt over here by actually going out for at least a month. Yeah, all right, this gives me the time to be wrong, all right, in case the market makes a run up, all right, and still have time to be correct, all right, on the next down move over here in case Trump, releases another one of those tweets that he's famous for by now. Okay, now, so if I look at these options over here, I have a pick. Yeah, all right, I can pick anywhere from the 40 strike all the way to the 47 strike. Yeah, all right, buying a 47 strike put option, yeah, all right, would cost me around $2.90 over here, all right, whereas buying a 40 put option over here would cost me only about 25 cents. Now, so which is really the right one to buy over here? That will be the next job you need to do as an experienced option trader, all right? Not only do you know the direction, where the high probability direction is going to be for the stock that you're going to trade on, right? Next move is really selecting the right put options over here. Yeah, okay, all right, now, so moving ahead to another stock that we're going to look at over here, right? It's another financial stock. I'm actually going to look at Citigroup over here. Yeah, all right, Citigroup has been a stock over here that has not really benefited or fully recovered and broken out since the 2008 crisis, so it's still suffering pretty much from it over here. Now, and the stock price has fallen from the peak of $70 in this year's trading, right, down to about $64 level before bouncing back up to close yesterday at almost 66. Now, so it's hitting the 50-day moving average line over here, together with some resistant points over here at the 66 levels. Right, so if the trend is going to go down over here, so what we're going to do now is we're going to aim to get in over here at a point of resistance. Yeah, okay, so that puts the odds in our favor over here. So if I'm going to go to Citigroup, I'm just going to load the options over here, right? Just thinking aloud. Yeah, all right, if I'm going to trade on Citigroup over here, what I'll do again is I'm going to go to the 25th June expiry, all right, which is about 35 days over here. Yeah, okay, all right, now, and I will actually look to buy. Yeah, all right, for this particular trade, I'll actually look to buy a 70 put over here. Yeah, all right, I may actually buy a 70 put, all right, and I'll pay the medium price over here of about $4.30. Right, the bid and ask right now is about $4.20, $4.40, so I can actually look at paying about $4.30, which is in the middle, all right, and try to buy this put option over here. Yeah, all right, now it doesn't mean that I'm going to risk $4.30 for this particular bet that I'm taking on Citigroup going down. Right, because I can actually set a cut loss over here to close this whole trade when the option price over here drops all the way to, for example, say $2.15. Yeah, okay, now, so if I actually close this position when the premium drops to $2.50, what would happen over here is I bought something for $4.30, all right, and I'll end up selling it for $2.15, all right, that will put my cut loss at about $2.15 basically. Yeah, all right, okay, now, so there's a lot of ways to play with options over here, but if you know exactly what you're doing, all right, and you have done enough of it and you have come up with a strategy to benefit from what your expectations are, right, it can really become very handy over here. Because if you look at it over here, if the stock goes down, right, I get a benefit of the doubt, I get a win because my put option allows me to win when the stock prices go down. Yeah, all right, and because I'm in a 70 put, right, the moment it continues to go down over here, I'm going to be winning more and more, all right, which means the options is going to start getting more and more expensive, right? The newbie's mistake of trying to buy a cheap option at 57.50 over here, right? So the stock currently is still way above this price. So if it comes down over here, right, but stays above 57.50, right, the options is still not worth anything at all, right? There's no intrinsic value in the option, there's no claim value behind the option itself, right? So that's the risky bet that you're looking at, right? The only real way for people to win with these kind of cheap priced options over here is if Citigroup shares really crash to a certain extent, or like, you know, a quick crash in the price over here of 5 or 10%. Yeah, right. But you know, Citigroup isn't that bad a company. It's a too big to fail company. You know, expecting these kind of crash over here would be expecting a similar crash when it comes to the whole S&P over here. Yeah, right now. So I hope in today's updates over here, it kind of makes a little bit of sense over here when it comes to options trading. How do you pick options, you know, for the right win over here, all right, and increase your chances of winning as an options trader. Yeah, right. So these are the little trades that I will take in and out, you know, when the market opportunity presents it to me, right? But you know, on a week-to-week basis, I'm predominantly an option seller. I'm trying to build a portfolio of entirely good shares around selling options, right, to create their weekly incomes, right? But all these presents to me those little extra wins over here, right, where, you know, I've made, if I'm not wrong, my memory doesn't fail me, 70% and a 50% return on recent put options that we bought on Cisco, yeah, right, Cisco and JP Morgan. Yeah, okay, now, so that's all I'm going to cover in today's update. All right, today's market is going to be really exciting again because it's going to combine the monthly option expiry. All right, today is actually the monthly option expiry for the month of May. All right, together with, you know, the China trade agreement, all right, and China announcing they're taking a harder stance than what people expect over here. So we are in for, you know, something interesting compared to yesterday over here. We might see some fear coming back into the markets. That's all from me over here. This is Terence Tan, the Impossible Investor, signing off for this market update on the 17th of May today in Singapore. All right. Meanwhile, everybody stay safe, stay sane, stay impossible, everyone. All right. I'll catch you in my next content update.